Hello, Rich Insiders. Welcome back. The European Union is at a crossroads. Voters across the continent headed to the polls in the 2024 EU elections. These elections have profound implications, shaping the economic trajectory of the Eurozone for years to come. The EU currently faces numerous challenges, including the implications of the war in Ukraine and sanctions imposed on Russia, soaring inflation, rising interest rates in the EU, and the lingering effects of the COVID-19 pandemic. The outcomes will determine the direction of the EU and the future of the euro. The decisions made by the newly elected European Parliament and Commission will reverberate across the continent. They will influence everything from agriculture and investment to employment and social welfare. The stakes are high, and everyone is watching closely to see how the EU navigates these turbulent times. In this video, we will provide an in-depth analysis of the economic impact of the 2024 EU elections. We will examine the potential policy shifts, the impact on economic stability, and the implications for key sectors. We will also draw upon historical data and expert opinions to assess the long-term economic outlook for the Eurozone. The aim is to provide a comprehensive understanding of the economic future of the European project. The newly elected European Parliament and Commission will shape the EU's economic agenda for the next 5 years. The outcome of the EU elections will have profound implications for economic policy across the Eurozone. One key area where we can expect to see policy changes is trade policy. Trade policy has been a central aspect of the EU's foundation, which was built on the idea that economic integration would help prevent future wars in Europe. However, this principle is now under pressure. The upcoming European elections will show whether trade and economic integration are starting to harm the European political landscape instead of strengthening it. This issue is significant because the EU is the world's largest importer and exporter of goods and services, and it provides substantial foreign direct investment, including around $2.5 trillion to the United States. Historically, this economic activity has benefited European consumers and workers, but since the 2008 financial crisis, the model has struggled. The relatively stronger economic growth in the United States and China has highlighted Europe's weaknesses, further worsened by high energy costs due to the EU's ambitious climate policies and disrupted oil and gas trade with Russia following its invasion of Ukraine. Political tensions related to trade and economic integration have been increasing in Europe. Previously, these tensions were overshadowed by the failed US-EU free trade negotiations and the trade disputes initiated by then-President Donald Trump, which included tariffs on European steel and auto exports. These events made European politicians more aware of the need to protect Europe's economy and workers from external threats, such as growing competition from China and a US trade policy that, even under President Joe Biden, prioritizes national security and domestic industry. Several signs indicate a more defensive trade policy in the EU, the failure to finalize trade agreements with Australia and Mercosur, protests against agricultural imports from Ukraine, a focus on strategic autonomy and economic security, and the increased use of anti-dumping and anti-subsidy measures, including against Chinese electric vehicles. Additionally, the EU has implemented a carbon adjustment fee on imports from countries that do not match the EU's efforts to reduce greenhouse gas emissions. All of these underscore a defensiveness in EU's trade policy. It is crucial to see how this election will change this, or if it will at all. Another key area where we can expect to see policy changes is fiscal policy. In layman's terms, fiscal policy is the use of government spending and taxation to influence the economy. The EU has strict rules governing government spending and borrowing, designed to ensure the stability of the euro. However, there is growing debate about whether these rules are too rigid, preventing governments from investing in growth and jobs. In fact, French President Emmanuel Macron has on several occasions highlighted that Europe needs smarter and less regulated industrial and energy policies. Another area where we are likely to see policy shifts is within EU's free trade agreements worldwide. This is because there is increasing skepticism about the benefits of free trade, with some arguing it leads to job losses and undermines environmental and labor standards. The new European Parliament and Commission will need to navigate these complex issues, striking a good balance between promoting trade and protecting the interests of European citizens. Understanding these potential policy shifts is essential for businesses, investors, and policymakers alike. The 2024 EU elections have injected both hope and uncertainty into the Eurozone's economic outlook. One of the main challenges facing the newly elected European Parliament and Commission is balancing the need for fiscal discipline with the need for economic stimulus. The EU has strict rules governing government spending and borrowing, designed to prevent excessive deficits and debt levels. However, these rules have also been criticised for being too rigid and preventing governments from investing in growth-enhancing measures. Another challenge is addressing the underlying causes of populism and Euroscepticism, which have gained traction recently. Despite these challenges, there are reasons to be optimistic about the Eurozone's economic future. The European Central Bank, ECB, has taken unprecedented steps to support the economy during the COVID-19 pandemic, including cutting interest rates and launching a massive bond-buying program. According to reports, the Central Bank of Hungary set the key interest rate to 13%, making it the highest central bank interest rate in the EU as of September 2023. Although these measures have helped to prevent a deeper recession and have maintained borrowing costs for governments and businesses, disposable income of individual households has suffered a lot. The outcome will depend on the ability of the newly elected leaders to address the challenges facing the region, while also capitalizing on the opportunities for growth and reform. The economic impact of the 2024 EU elections will be felt across all sectors of the Eurozone economy. However, some sectors are likely to be more affected than others, including those heavily reliant on EU funding, subject to EU regulations, and exposed to international trade. One sector likely to be significantly impacted is agriculture. The EU's Common Agricultural Policy, CAP, is a major source of funding for farmers across the bloc, accounting for a significant portion of the EU's budget. The outcome of the elections could lead to changes in the CAP, affecting farmers' incomes and food prices. Another sector likely to be affected is the energy sector. The EU has set ambitious targets for reducing greenhouse gas emissions and transitioning to a low-carbon economy. These targets will require significant investment in renewable energy sources and energy efficiency measures. The outcome of the elections could determine the pace and direction of this energy transition, impacting energy companies, investors, and consumers. The financial sector is another area where we can expect to see significant impacts. The EU has been working to strengthen financial regulations in the wake of the 2008 financial crisis. The outcome of the elections could lead to further changes in financial regulations affecting banks, insurance companies, and other financial institutions. Businesses, investors, and European citizens need to pay close attention to the policy pronouncements of the newly elected European Parliament and Commission to anticipate and adapt to the changing economic landscape. This year's EU elections are not the first to have significant economic implications for the Eurozone. Several historical examples illustrate how EU elections can shape the economic trajectory of the region. One notable example is the 2010 Greek sovereign debt crisis, triggered by excessive government spending, a lack of fiscal discipline, and the global financial crisis. The crisis led to a loss of confidence in the Greek economy and raised concerns about the stability of the euro. It also led to a series of bailouts from the EU and the International Monetary Fund, which came with strict austerity measures that had a significant impact on the Greek economy. Another example is the 2016 Brexit referendum, where UK voters chose to leave the EU. This decision sent shockwaves through the global economy and raised concerns about the future of the European project. While the UK was not part of the Eurozone, its departure from the EU had significant economic implications for the bloc, leading to uncertainty in financial markets, disrupted trade flows, and questions about the long-term viability of the EU. These historical examples demonstrate that political events such as EU elections can have a profound impact on the Eurozone's economic landscape. They underscore the importance of understanding the political dynamics at play within the EU and how these dynamics can translate into economic outcomes. The 2024 EU elections will be no different. The decisions made by the newly elected leaders will have far-reaching consequences for the economic future of the region. The long-term economic outlook for the Eurozone is subject to a range of factors, including global economic conditions, demographic trends, technological advancements, and political developments. In light of the 2024 EU elections, economic experts have been closely monitoring the potential policy shifts and their implications for the Eurozone's economic future. One prominent theme is the need for structural reforms to boost long-term growth. Experts argue that the Eurozone needs to address long-standing issues, including rigid labor markets, low productivity growth, and a lack of investment in research and development. They suggest that addressing these issues will require ambitious structural reforms to increase competitiveness, foster innovation, and create a more dynamic and resilient economy. Another theme is the importance of fiscal sustainability. While other parts of the world has recovered from the economic impacts of the COVID-19 pandemic, the Eurozone is still facing significant strain on public finances, leading to a surge in public debt levels. Experts warn that high levels of public debt could pose a risk to economic stability in the long run, and urge policymakers to pursue fiscal consolidation measures once the immediate crisis has passed. The role of the EU in supporting economic growth and convergence within the Eurozone is another key theme. Experts highlight the importance of EU-level policies and investments to reduce economic disparities between member states and promote economic convergence. The 2024 EU elections have added a layer of complexity to the long-term economic outlook for the Eurozone. The policy choices made by the newly elected leaders will be crucial in shaping the economic trajectory of the region in the years to come. As the election season heats up, it's worth keeping track of the elections that most affect your life and business as they develop, helping you make informed decisions to secure your future in a rapidly changing world. What are your thoughts? Is Europe's economic future going to have a soft landing? Let us know your comments. We'd love to hear from you. Until next time, take care.